Schedule B-50 is where you'll record member contributions to the fund and analyse those contributions into concessional and non-concessional components and allocate them to each member. You'll notice that there are a number of smart warnings already, and we'll eliminate those as we deal with each area. If you require a deduction claimed by a member form, you'll see that by selecting the navigating button B51. However, the first and most important step in this schedule is to reconcile the expense in any related employer private company with the contributions made by the members to the fund. This figure here should equal the superannuation paid by the related private company, and you should reconcile the two, and ideally they will be the same. You then can list any other taxable contributions received by the fund on behalf of members from other employers or other sources, and should there be insufficient lines, you'll notice in any section in the work papers, you'll notice that there's a green arrow here, and by selecting that green arrow I am able to insert an additional line and record extra amounts being contributed. Let me just complete that. So in any section I can add additional lines by selecting the green arrows. The next part here is to note any non-taxable or non-concessional contributions to the fund. These may be personal contributions from the members or rollovers. Anything that is non-concessional is recorded. Each item is recorded in here. There is facility for crediting members' accounts directly if that's the way you prefer to record transactions. Otherwise, the recording in the top sections here will put them through the profit and loss of the fund. Next section is where we reconcile the contributions to the transactions that have been processed in the fund. You recall we've already processed clients' information on Schedule B, and now we're reconciling that information with the contributions we've noted above. As we processed the client's bank statements, we found $46,000 of cash that was deposited in the fund, and otherwise we've detected another $6,000 that was paid, recognised as superannuation expense by the related company accounts and called superannuation, but it was not cash actually paid to the superannuation fund, so we're now recording that as a contribution into the fund, a non-cash distribution. Also note there's another non-cash contribution where the members have transferred shares into the fund and treated them as a contribution. Even though no cash was deposited by the members, they transferred shares, and their value should be recognised as contributions. So the total contributions we've processed through the ledger is $92,000. Total contributions we recognised, however, before was $96,000. So we have a slight discrepancy, and that shows up by a red X appearing against the concessional contributions. Not until we've got those agreeing will that red X go away. So now let's, I'll get those right then, we must have further contributions of some sort into the fund to make it 96,000. So I'm adding in, I found what that error was that I've now found, cash found, and what I've processed in the ledger now agrees with all the contributions I've identified, and I will now allocate that to the members. I've identified that of the concessional contributions, 22,000, and I think it's now 26,000, needs to be changed to make it agree, is going to John, and 30 to Mary, 30,000. The non-concessional contributions have been allocated 20,000 to John and 20,000 to Mary. So I have allocated the members' contributions into concessional and non-concessional components, and I've related it to which member the amounts belong to. The final thing to note on this page is that the average number of days is required for the calculation of members' benefits, of allocation of earnings, particularly between pension and non-pension accounts. So it's necessary for you to estimate and the average number of days that the members' contributions were in the fund. And obviously if the contribution is made entirely on the 29th of July, they're only in the fund for 2 days. However, if they're made evenly through the year, you may estimate they've been in there 185 days. If you require a more detailed calculation, select the Calculate navigator on the side here, B-53, and you'll be taken to a schedule where you can detail, as I have done here, each transaction for the members, and including both concessional and non-concessional amounts in the figures that you list. And when you enter all the necessary details, you will get an average number of days for that member for the money that's been in the fund. Transfer that figure over to B-50, and you use the same number of days for both concessional and non-concessional balances. Having entered those figures, I have no apparent red crosses up the top. I have an option here. I can another opportunity to select a Section 290 notice. There's a final check here to make sure all the items are their contributions are under the age limits, and you'll get a warning if they're excessive, and you can look up in the help area here what the limits are, but you'll get a warning if they're excessive. You can see down the bottom here that my contribution smart checks have not been cleared until I answer in the positive yes that they're under the limit. And the other check is to make sure any rollovers or transfers are properly documented. By this, it means that you should obtain paperwork from the fund the monies have come from to show the nature of the amounts received. It's best to do this when the funds are first received, because if you have to go back in what could be years later, it can be very difficult, if not impossible, to find out this information. It's important when rollovers are received to get the necessary paperwork to determine the break-up between concessional and non-concessional of those monies and any other information you may need to know about the contributions.